All right, welcome to Drill Down Earnings. We have second quarter results from HubSpot. Company's stock is moving, but what about the company? Let's take a look at the business story behind this one stock on the move. I'm Cory Johnson, Chief Market Strategist for the Futurum Group, and we look at HubSpot. Interesting company. It's changed a lot over the years. It's become more of a CRM play than just a website marketing tool, but it's a little bit of all those things right now. They reported second quarter earnings. This is better than Wall Street expected. When we dig a little bit deeper into the numbers, we see total revenues of over $600 million. It's up 20% on a year-over-year basis, which is good. Subscription revenue also up 20%, and it was most of that revenue for the company. And their professional services business was also about $14 million in the quarter. But again, that subscription business very important to them. And but yet they lose money. And they continue to lose money. And they've been losing money for a long time. Their operating margins of negative 4% in the quarter, not great. And like I said, those losses are persisting over many, many quarters and years for this company. And nonetheless, when the guidance came out for this company, it wasn't as bad as Wall Street expected, given their expectations. I don't know what that means, but the stock was up as 7% in after-hours trading and down 7% for the entirety of the year going into this. So I guess it's been break even, but break even in a really exciting way when the stock rallied into the early parts of this year and then sold off dramatically this quarter. And again, up a little bit afterwards. But one of the things they warned us about last quarter, and one of the reasons the stock sold off so much, is the CEO told us that it was taking longer to close qualified leads. That those qualified leads, the QLs were coming in, they call it qualified leads, from their various partners, but they weren't able to close those deals as quickly. They were suggesting it was because it was better deals and better ones take longer, and I don't know who was buying that because the stock sold off so much. But the CEO, Yamini Rangan, now says that indeed they are in a healthy place right now.
It's really in a healthy place right now. And maybe just to step back, in Q1, we shared that we saw a mix shift at the top of the funnel from partner sourced and qualified leads to more of rep source leads that tend to take more time. And we're definitely seeing good progress on the partner as well as the QL side. And maybe just as a little bit more context, there are a couple of ways in which we engage with partners. The first is actually co-selling, where the partner team and the HubSpot sales teams work closely together. And that co-selling motion has been doing really well and has been consistently up. In the first half of this year, it was up by 71%.
So they say the leads are doing a little bit better now. Maybe that's why the stock's up a little bit in after-hours trading, making up for the losses of the last year. But I'm going to give you one number that tells you a whole lot about this business, something to really remember about how this company is doing right now in this moment when the drill down earnings continue.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So HubSpot just released second quarter earnings. Conference call just ended with company management and the analysts on Wall Street. Here's the essential summary of what you need to know. $637 million in revenues, up 20% on a year-over-year basis. And while the company continued to lose money, 4% operating margin loss, and has lost money now for quarters and quarters and even years, the revenue growth is tailing off, but it is 20%. Maybe that was good enough to make Wall Street feel things were a little bit better than they had hoped, with the stock up a little bit in after-hours trading. All right, thanks for checking out the Drill Down Earnings. Drill Down Earnings, part of 6.5 Media. And of course, you can check me out on X at CoryTV. Leave me some comments, tell me what you think, tell me what you'd like to see. You can also watch us some clips of shorter earnings presentations on TikTok and Instagram at Drill Down Pod, and lots of full earnings reports and more news about technology, the 6.5 Media page on YouTube.